It's my pleasure to welcome all of you to what promises to be a fascinating, very timely conversation about Brazil, its current global role, and its advances in fintech and digital payment systems. We're honored to have with us today a very distinguished speaker who will offer some remarks and then have a conversation with Sebastian Edwards, a distinguished professor of global economics and management at UCLA Anderson. We want to thank the UCLA Anderson Center for Global Management for hosting today's discussion, and the UCLA Latin America Institute and our Latin American Business Association for their support. We're also broadcasting this discussion live, and I know many of our Brazilian alumni are watching. It's now my pleasure to introduce our esteemed guest. Roberto Campos Neto is governor of the Central Bank of Brazil, a role he's held since February of 2019. For more than 2 decades, he's worked in leadership positions in financial institutions in Brazil and abroad, including for a number of years at Santander in Brazil. He's a strong proponent of technological solutions, innovation, and inclusivity in the financial sector. Roberto has been involved in studies related to blockchain and other digital assets aimed at helping to create the financial system of the future. Before joining the Central Bank of Brazil, he launched the Agenda, a set of structuring measures that aim to foster competition, inclusion, transparency, education, and sustainability in Brazil's financial system through a number of initiatives and the promotion of microcredit, credit unions, rural credit, and green finance. Finally, we're very proud to note that our guest is a double Bruin. He holds both a bachelor's and master's degree in economics from UCLA, and we're so pleased to welcome him back. So thank you, Roberto, for joining us. We're very much looking forward to your remarks and conversation. And please join me in welcoming Governor Roberto Campos Neto.
Well, thank you, everyone. It's a pleasure for me to be here. Actually, I was walking around campus yesterday, and after almost more than 25 years, it felt very good. I was here for undergrad and grad, so I really love the school. It's an honor to be here. I thank you. I want to thank UCLA for the invitation. The idea here today is a bit to talk more about technology and innovation than the macro, but we can go into macro if you want to. And I want to do this as informal as we can. Brazil has been going to some rough times lately. I think we also saw what happened on the 8th. We condemn that very strongly. It's very unfortunate what happened, unacceptable. And I hope they are able to investigate and punish the people who were responsible for that. I think it damages the credibility of the country. And we need credibility now to go back into growing in a sustainable pace. Now, let me switch to the Central Bank Innovation Agenda. The idea here is try to talk a little bit what's happening in the digital world. I have been involved with technology for a long time now. I love this issue. I always thought the central bankers were too much macroeconomists and not enough technology people. So the idea was to be able to bring those things together. But then the question is, what is actually happening in the digital space? This, I think, is what lies behind. People talk too much about the assets, the crypto assets. But what's important, what's the technology behind that, and what's happening with that, and what's going to happen in the future? So in the end, I think what people are doing is people are looking for a digital representation of value. And people are finding a way to do that, put an encryption around, and distributing that into ledgers. I think that's the wave that we're seeing. It got damaged by some of the things that have happened lately, but I think by no means it's going to be reverted. Actually, I think this is when you look in the long term, this is going to have been a blip in history. So what is the real debate, and what is important, and that what's driving us to look, to work on that? The real debate is: are we moving to a tokenized economy? So when you look into a financial system, are we moving from an account-based to a token-based? We think yes. We think that's happening, and we think that removes a lot of inefficiency, decreases the cost of financial intermediation, and allows for inclusion in the financial intermediation, and allows for a lot of efficiency in terms of the quality of the risk management. So tokenized assets for negotiation is the main transformation. What we're seeing is people trying to extract value from an asset in a digital form, like I mentioned before. You've seen that in art, pictures, everything, even money. And again, I think people too much focus on the crypto asset idea, and I want to move away from that a little bit for now, because I think there's something big happening, and this is happening everywhere. I think the metaverse is an example of what's happening, which is trying to monetize things that are virtual, trying to monetize virtual environments for negotiation. I think there's still some difficulties with the way you interact in the metaverse with the goggles and the technology. I think is finding some difficulties so that you can find yourself at ease with that. So it's only the beginning. I like this phrase that I put at the end because I thought that actually summarized a lot what we thought in Brazil when we decided to design the program, which is if the tokenization thesis holds true, then the 21st century may be the creation of a regulated global token-based multi-asset network. So I'm going to take a step back now. When I joined the central bank, and people were saying, why you're talking about instant payment and what are you seeing? And at that time, I remember the first part of this graph I showed in a presentation in beginning of 2019. And most people thought, that doesn't make any sense. And at that time, what I was seeing is, I think there is a run for the gold here. And the run is to integrate vertically text, payments, and content. And we are seeing WhatsApp trying to do payments. We are seeing Google trying to do Google Chat. And why we thought that was the run for the gold? Because if you're able to integrate text, payments, and content in the same chain, basically you have, if you think in the sale of the product, you have from advertising, you have the sale, you have the payment, and basically pretty much through AI you can find you can understand what the client thinks about the product. So that was a very powerful chain of information. And we started to see that the fight was for that. The regulators were kind of breaking that. In Mexico, we had a problem. They had that. We had that in Brazil. And we thought, seeing what's happening, what we really need here is to pick up this moment, this momentum, and introduce an important piece of the whole plan of the part, which is PIX. So we worked very hard on the instant payment. So the idea is we have instant payment, we have open finance, we have innovation in the currency, and then we tokenize everything. So we need to understand that those are 4 blocks that are going to merge together. But in the beginning, I couldn't say that because people would say, you're thinking too much ahead. That doesn't make any sense. So I had to start with PIX. Why did I start with PIX? Why PIX was the easiest one? Because that's where you see the tangible gain, more immediate tangible gain for people. And it generates a lot of inclusion. So basically, the technology agenda is understanding these 4 blocks. What I'm going to tell you is what is each of the 4 blocks and how they're going to integrate together. And how this is going to look in the future, okay? So the first is PIX. So we started designing PIX from the very beginning. We knew we needed an instant payment. We talked to a lot of the gamers, a lot of people that were using cryptocurrency at the time, trying to understand what is it that you're looking in the payment. So basically the characteristics that always shows up is we need something that's fast, that is secure, that is cheap, that is trustable, and that is open. So basically, those are the characteristics. We need to have that, and we need to show that. And all the marketing of the product, all the marketing of the system needs to be around that. So we started designing. There were a lot of questions in the beginning. You want to do blockchain? You want to do integrated center? If you understand blockchain well enough, you know that the scalability on blockchain is very limited. We are now running 110 million payments a day, so it would be very difficult to run that in a blockchain from the design that we had. So the idea is we're going to start doing integrated, but we want it to be programmable so that you can add smart contracts on the top of it, and you can actually have programmable money in it. And that's the main difference between PIX and, for example, the UPI Ninja, which is a great system, but it's not programmable. And that has all the implications when I start putting all the other parts together, right? So this is how Pix is growing. You can compare with other countries and you can see the growth was immediate. Today it's very common that you go on the streets in Brazil and people are asking for money using Pix. It also generates a lot of new business models because the transfer of money was so expensive for someone who was selling items of very small value that the business was not viable. So it not only generates inclusion, but it generates new business models. A lot of business models actually only happen because of Pix. So we have around 9 million people that just open bank accounts because of Pix. We're able to monitor that. We have a lot of hundreds of thousands of companies that just started the market because of that, and we had a very rapid growth. Also, the average ticket started to increase as more people start going into the business. It used to be more P2P in the beginning, now it's becoming to be more P2M. We think this is going to grow. And when you compare to other means of payments, you can see, and this is very different when you look at Brazil and some other countries, the way it's growing, right? It's now, grown more, and it's actually more than what we imagined when we designed it. But Pix is always evolving. If you know something from technology is one thing. When you design a project, as you work through the project, you realize that you have many more features that you can add into the project. Especially when it's open source, you start to see, I can do this and that. So as we are launching Pix, we are realizing we can do much more with the platform. So we are now announcing some of the new features that are going to come. So we're going to have the Pix automatic. I can go on and on. We don't have time. I was told to not use more than 15 minutes. One thing that I want to give an example, though, is very important, is I was once traveling around in the interior of the country, and I realized that we have many cities that didn't have bank branches, and they didn't have ATMs. And the only way for people to get money is they had to take a transportation, go to other cities to withdraw money. And that created violence that was very difficult. And I was with a friend who is actually a very important guy in the finance space in the US, walking in the streets of Brazil, and we saw an ATM, and we were having this conversation. This doesn't make any sense. It's a machine made out of metal. You have to rent the space. The money doesn't get here automatically. If it's broken down, you need to call someone. There is no one to fix it. And you pay for it, right? And so the question is, why can we make every cash register everywhere be an ATM? Remember that people at the store, they pay to have people at the cash register. And people would like to go to a cash register when you don't have places when you have ATM. So we started to develop products that actually use the rail of Pix into the cash register so that any store in Brazil can actually start performing tasks of bank. It starts with withdrawing money, but we can add more to that if you want to. So the second part is the internationalization. This is happening already. We have now Colombia, we have Peru, we have Uruguay, and we have talks with other countries, and we are opening the protocols of Pix for free for anybody who wants to copy. We had this 1 week in Brazil where all the central bankers for other countries could go into Brazil to copy everything. We don't want to charge anything for that. We just want a common rail so that we can start doing Pix internationally within the countries. It's happening already. In Uruguay, it's happening a lot. It's happening in some other countries. We are so advanced with Bolivia on that. So I think this is a way to create the cross-border payments in a much cheaper way than what some of the other central banks are trying to do. And then the second part. So remember, the first part is we needed to have this instant payment, which is a rail, which was programmable, and which was the instrument to generate financial inclusion. But we can't do much with financial inclusion if you can't have instant portability and instant comparability. That's what generates competition. So we needed to have an open finance system that integrates with Pix. And we designed the most wide open finance that we have out there. If we are ready by the time that we think we are going to be, it's going to be the fastest one too. I can go on and on talking about all the features of the open finance that we have, but I don't have time, but I'll be able to answer questions. The only thing, we already have over 8 billion API calls. So we started to have the transmission of information. Today in Brazil, if you go into the app of your bank, today, now, it's working already, and you want to do a Pix from another bank, you can do that from an app from a different bank today, because everything is getting connected now. And this is going to be done in phase, and I'm going to tell you how it's going to be done. The other thing that we want to put together is data monetization. We produce a lot of data, we don't monetize them. I think one of the inconsistencies and the imperfections of the market is we are not being able to monetize our data. There are a lot of companies in the US that are doing projects that are very interesting. There is actually a company run by a Brazilian guy called Wave, I probably heard of it, that's trying to issue tokens on the data that you accumulate. We think we need to create a system so that people can monetize data, and that is integrated into what we're doing. And now I'm going to the CBDCs, which is, okay, so first you have the rail. Then you have instant comparability and portability. But I want to transform that into a tokenized system. How can I transform that innovation into something that actually is going to be tokenized? It's through our CBDC. Our CBDC is going to be different from any other because our CBDC is nothing but tokenized deposits. So a bank will block a deposit and issue a token on it. And that has a lot of different implications from what is being done in different countries. Remember that one of the main questions that remain unsolved when banks design CBDCs is you don't want to hurt the ability of banks to do credit. You don't want to have assets and liabilities in the balance sheet of the central bank. You don't want to remove the competition power that the banks have on the balance sheets. Also, regulation is very difficult. And if you are doing a CBDC that is basically tokenized deposits, it inherits the regulation of deposits, which already exists. So it's much easier. So we can go through some of the features. But when we started talking about that, and I was meeting my fellow central bankers, my peers, the first thing that comes to our mind is, what is the question that we're trying to solve for? I mean, if you are trying to solve for a question of instant payment, I don't need a CBDC, I already have Pix, right? If you are trying to solve for the question of wholesale payments, I don't think that's even that relevant, even though I understand that some central banks in Asia think that this is the most important thing. This is not what we thought was important for Brazil. So the question is, the CBDC has to be a way to tokenize the system, and it has to be a way to bring the DeFi space closer to us, as opposite of what we are seeing today, which is central banks pushing them a bit away. We want to do the opposite. We want to bring them closer. And we're going to show you how that's going to be integrated. So in terms of opportunities and challenges, I think this is pretty much standard of what we see in DeFi. The DeFi grows almost 4 times more than the regulated system today. So it's important that we understand that and we bring them closer. There is all the scalability problems that I already mentioned in blockchain, the interoperability, maturity, divisibility. I will run a little bit. This is basically a DeFi architecture. I won't go too much into the technology and the hyperledgers, how they interact. I can answer that because we studied that very deeply, but this is basically how we look at the DeFi architecture and how we want that to interact with everything that we are creating. So you have the aggregation layer, the application layer, the protocol layer, the asset layer, and the settlement layer. And there is different implications on the technology that you choose. So for example, if you're going to do a Corda R3, you're going to have one implication. If you're doing hyperledgers, depending on which technology you're using, it becomes more or less open source in the future. It also has some implications. So we are talking about CBDC, and basically what we want to do is we want to innovate and create a competition. We want to improve cross-border payments, which is already being done by Pix, and we want to reduce the use of cash. The challenges we all know today, and we are seeing that a lot of central banks have projects, pilots, but they all still have these unsolved questions, one of which I just mentioned, which is how can I protect the banks at the same time of issuing a CBDC? And I remember a very interesting debate once with other central banks, and I raised this question. I said, if you do that in a country like, and depending on how your country has M0 and M1 and the other aggregates. But in the case of Brazil, and a lot of other cases, if you do that, basically what's going to happen is people will try to switch as much currency to a CBDC, and basically you're going to hurt the ability of banks to do credit. And I remember when we were in that meeting, someone said, no, but we are only going to issue a limited amount. So it's like I will allow people to switch currency into CBDC, but only like 10 or 15 or 20%. And we all know that's never going to happen, right? Because if you are an informed person and you know that you can always switch back, you're going to switch everything because it's equal or more in terms of value. So we do a basic game theory equilibrium, and you find out that that's never going to happen. So I said, that's never going to happen. And then someone came with the idea, but we can have negative rates. So we can have negative rates on that so that you equate demand to supply. Imagining change the rates every day of a digital currency to make, that's not possible either. So again, some of these questions remain unsolved. In some places where you have money markets that are very developed, it's less of a problem. But in some other places, still you have to answer this question. This is the base guidelines that we issued like 2 years ago on what we wanted to do. I would probably say here the important thing is I want to solve for the questions that I need to solve, but I also want to create competition, understanding that what our thinking is that the system is going to move into a token-based system. So the Brazil is following a different path. Like I said, we have these new models of DLT, centralized settlement. We have this discussion of who centralized the protocols. You have some nodes on the blockchain that can control information. You can actually have that done in a more, let's say, recursive way, depending on the technology that you choose. The data protection is being very important, and how to avoid the corruption of the banks. But basically here, what we are going to do is transform the deposits into token. Again, it inherits the ability of the deposits. But then the question is, why is this going to be good for banks? My main job here is to convince banks that this is actually going to be good for them. In the same way that I had to convince banks that PIX was going to be good for them. Because the first math that you do if you're a banker is, okay, now I'm not being able to charge for the transactions anymore, how much I'm going to lose in fees. But then the second thing is, well, if that changes the velocity of the transactions, if it increases the number of velocities, if it generates new business models, if I have not 9 million people opening bank accounts just to have that, I'm going to lose money on one end, but I'm going to make money on the other end. And if I can add programmable features into that, I can actually do credit on a much cheaper way. And I don't need to pay the credit cards companies and use the Visa and MasterCards of the world, because I can do credit straight with my client, right? So I think banks now see that they have something to win, and the same thing that we had to do for PIX, we need to do for the tokenized system. And basically we need to show them pilots where you can see that the securitization of assets becomes much cheaper once you have a token account, a token-based system. We have had some pilots on that. The technology for controls, when you have DLT to control a risk of the bank on a DLT system, is much cheaper, it's much more integrated. You can do divisibility on many, many instances of the stress testing, which today you can't. Today, you look at the stress test, and if you look in the US, it's a challenge. I wasn't in the bank in the US, I was actually in the board of a bank in the US during the stress test periods, and I said, this looks like the Flintstone age, doing a stress test. I mean, we should have something much better than that. So controls, the asset liability relation becomes much easier once you have everything tokenized too. I can go on and on, I just put the most important things, but I think this changes the profitability of the banks, and it changes the cost of financial intermediation, generating inclusion, which is at the end what we want to do. So basically it's a bit messy, but this is what it looks like at the end between wholesale, instant retail, and the smart settlement. And I will leave the presentations for you if you want. So we have all the IoTs, stages. We have the relationship between the hyperledgers and the open source bases that we're going to create in the future. This is basically a lab that we have. We do everything in a format of lab of technology, so people can submit the projects. We collect them and we innovate on them. These are some of the projects that were selected, and you can see we have wide participation from private companies. This is basically what we want to do in terms of the guidelines. Obviously, when you are implementing something like this, it's very difficult to meet all the deadlines. And we had a problem with the strike in the central bank last year. And but I think people work very hard. I think this is a project that all the people in the central bank deserve all the merit, because I go into other places and people look at what we're doing and say, it's amazing that you are able to do that in the central bank. So I would, again, I can't thank enough the workers of the central bank for being able to do that. And so here it comes now the whole idea. So we want to generate greater inclusion, low cost of intermediation. I already mentioned that. More competition. So the risk control, data monetization. We are going to get into data monetization in a second, and the tokenization, right? So these are the four blocks. So these are the first set of presentations in which I showed this together, because if I were starting to do peaks and started telling people that we're going to have all these blocks connected in the future, I would sound like a lunatic. Now I think people can see what actually it means. So now I'm going to tell you how we're going to integrate this. So the first integration, we are actually showing what the blocks are. So the internationalization and the opening of capital markets, the peaks, the wide usage by the population. I already mentioned that. The third one is open finance. And then we talk about the data standardization and the protocols for data, inclusion of the products. Remember that we start open finance a bit less wide, and we are widening and putting more products into that. The safety standardization, the reduced cost of sharing, the CBDC, again, the bridge to the DeFi world, and then the data monetization, the interaction with the digital wallets. We're going to do everything in a format of digital wallet. I'll talk to you a little bit. The phases of integration, this is the important part. So right now, we want to integrate PIX with other products, right? So we are integrating the PIX with open finance, and we do that. And that's the stage that we have now. That's why I mentioned that you can go into an app of a bank and you can actually do transactions from another bank. So we have the internationalization, the PIX and the CBDC, and this is how we're going to integrate everything. So I already shown, we are on stage, beginning stage in two right now. And then we go into this final stage, in which I call the financial aggregator, which I want to show you. So this is the tease that I had in one of the banks with the big banks, the meetings with the big banks in Brazil. So this basically is what I think it should look like in a year and a half. You don't have apps of 10 banks in your cell. That doesn't make any sense whatsoever, right? So if you have open finance, you have PIX, and you have everything integrated, companies will start to fight not only for the products, but for the channel. When you look in retail, companies fight for the channel, but in banks, companies don't fight for the channel because they have individual channel. So that's something that we need to change. So basically what you're going to have is you're going to have some kind of integrator. Some companies are working on that right now. Actually, Google is working on that right now. And basically, you're going to have one app. And they're going to compete in the same way that you have competitions for searching products today. And this is one idea of an app that I have. And actually, now we have some more developed system. But basically, you're going to go into your cell. You're going to get one app. And imagine you want to do a payment. So you're going to press PIX. When you press PIX, it's going to show all your bank accounts, how much you have in each one of them. And you can choose which bank account I want to pay from. Boom, boom, you pay. Or you can have the decision whether you want to do debit or credit. And because everything is integrated in open finance, if you want to do credit, it should show you all the credit lines you have from all the banks online, which is the rate for that transaction, and you can actually do that. And you can actually choose the credit, and you can actually compete online. If you want to do investment, or you want to buy an asset, or you want to buy a stock, the brokers will be connected into that, and they can compete online for the fees. You have other services like insurance and things like that we are going to connect. And then you're going to have one physical wallet and a digital wallet. On the digital wallet, you're going to have the tokens issued by the banks. But you can have other tokens as a digital wallet. You can have cryptos, you can have stable coins that you want. And the idea really here goes back to one of those high-level meetings that I had with the Secretary of the Treasury in the US. At that time, I think it was a year and a half ago, I pointed out that one thing that bothered me a lot is the concentration of custody. And we all saw what happened with FTX. And the problem is when you're a broker, I was in financial markets for 20 years. If you are a broker and you start taking position, that's the recipe of disaster. And if you are a broker or if you are a custodian and you start issuing currencies, it's like issuing an ETF, right? Because a lot of this is based on underlying assets. And the problem is all of a sudden the price starts changing and you start taking positions because you think you can do that matching at a better price. And this is what happens. So the idea here is I don't want to actually prohibit the banks from being custodian of digital assets, which is what most central bankers want to do. I want to do the opposite. I want to incentivize banks to be custodian of digital assets. If today banks were custodian of some of these cryptos, I don't think the FTX event would have happened. Because you can use much better risk systems to control that. And remember, everything is going to be tokenized. So again, we're going to have the digital wallet. The last two buttons on the system is basically if you worked on investment banking or if you're studying investment banking, you probably have heard of a product called cash management, which we sell a lot to clients. Basically, that button is a cash management on an individual level. So you're going to press the button, you're going to see all your cash flow, all the bills that you have to pay, all your credit cards, everything that you paid in cash. You're going to see the money that's going to come into account. You can program that, and you can see the flows. And basically, all this information is going to go down to a digital wallet. And in the digital wallet, you can see all the purchases that you made. You can actually put your medical records. You can do everything in there, and you can start issuing tokens on that. And that token is going to interact with the tokens that you have in a digital wallet. One other thing that we're building is the offline, because you have a lot of countries that you have places where you're not connected, right? So if you're not connected, instead of having like $100 or $200 in your wallet, you might just have some money on a wallet to spend with lower requirements of security, but so that it's easier to use offline. So you can download from online to offline, and you can use that. And we have a pilot for that too that should be working soon. So this is what it's going to look like, I think, in a year and a half, hopefully. I won't have time to go into virtual assets because that's something that we are working on that too. We had the legislation that's coming out. We are changing a bit the legislation. Again, the whole idea here is that we don't think we should isolate and ring-fence the banks. Because at the end, you can't ring-fence banks because it's connected by the liquidity. If you look at what's happening today in the tech industry, and you look at what happened in the crypto space, one thing leaked into the other, and you can see that. And I know enough to see how the leakage worked. So again, for us is to bring this DeFi and this tech space into the balance sheet of the banks, but at the same time, push the banks into the tech space by tokenizing assets and liabilities. Thank you.
That was amazing, Roberto. And,
Thank you.
We have time for a conversation. I'm going to ask a couple of questions, then we're going to open up to the public. I have a very old-fashioned iPad here, and we may get some questions from our audience online. When we discussed you coming here, I had just listened to a presentation like this one at a very big industry meeting, and I was impressed. And I told you to talk about fintech, but we have to remember that you are the governor of the Central Bank of Brazil. And you said you were not going to talk about macro, but I'm going to ask you about...
No, I said I can talk about macro, but you requested me to talk about that.
That is true.
I can talk about anything you want.
I know, even baseball, right? So let me start by informing our audience here about just three macro data about Brazil. Inflation is 5.8%. The interest rate is 13.75%, the interest rate that's and the exchange rate has been fluctuating between, it's 5.2 to today, right?
Yeah.
And it was 5.2 3 years ago.
Yeah.
Okay. In my professional career, I had never seen, until you took over, Brazil's inflation lower than US inflation. And I had never seen the currency as stable as it is. So we needed a Bruin to run the show to get to this. To have this, this amazing data. You opened up, and I'm very happy that you did this, your presentation with comments on what happened on the 8th and denouncing them and saying that it was not acceptable and that you hoped that. So you got immediately into the reality of the world and a difficult subject. And I have to ask you a question that is related to the real world and to politics. Some of my colleagues said that I should not ask you because it's not polite, but I have to ask you. In an interview published yesterday in O Globo, President Lula expressed some skepticism about the independence of the central bank. He was not openly, I mean, the way he is, he wouldn't do it, openly opposing it, but he made a quip that made the headline, and that has been circulated among investors around the world. So why don't you, how do you feel as being the first independent governor of the central bank of Brazil? So the second most important bank in the Americas, and Mr. Schiff from Canada will pardon me by saying that, but it's Jay Powell and then you, right? I mean, close second there. How do you feel that the president was skeptical yesterday, or is the financial media making a big deal of something that is not that important?
No, I think, you know, on some of these interviews, a lot of the things are taken out of the context. Because if you look at the interview, on one side he said he praised himself of Meirelles being independent, and then on the other side, I think what he meant to say is that I don't think that you need the independence in law. You can have the independence without the law to make things work. But when we think about what's happening in Brazil and how difficult the process of the election was in Brazil, I think the market would have been much more volatile if the central bank didn't have the autonomy by law. I think it would be another element of uncertainty that would add to more volatility in the long end of rates, in the Forex. So I think it already, in the first test, I think the independence of the central bank already showed very good resilience and signs that it can stabilize the markets. And we were having a conversation about our friend Julio from Peru. I mean, you look at Peru and all kinds of things are happening, but you look at Julio, which is, you know, a dear friend, and, you know, I hope he listens to that. You know, he's there, and, you know, the central bank stays. I mean, and the central bank stays. And he's been there for 20 years. And I think you gain that, and you advance on an institutional gain that is important for the society. So my view is what was done, and it wasn't a product of the central bank. The central bank cannot make itself independent. The Congress voted for that. People in the Supreme Court actually decided that was the correct way to organize the central bank. And one of the things that I need to tell people is that I owe all these people who supported the autonomy of the central bank to be there resilient from now to the end of my mandate, because it's not a will of the central bank. A lot of people actually went there and voted for that, and I need to respond to that, to that goodwill that we had from these people by saying that we are going to act independently and we're going to stay there to the end of the mandate.
Okay, so that was a very diplomatic, great answer, and I will not follow up on that. But the second question I want to ask, I'm going to ask one more macro question, maybe two, and then one question about your presentation, and then we'll open up. So inflation is lower than the US, which, as I said, I'd never seen it before. But interest rates, real interest rates, are huge. So your rate, I mean, I'm teaching now the macro class, and we talked about the federal funds rate and the policy rates and so on. You have one of the few, if not the only, very big central bank with a very high real interest rate, where the rate is 13.75 and inflation is only 5.75. And people say, well, that is going to have a negative effect on investment and on growth and so on and so forth. And people are asking, when are you going to cut interest rates? See, he's laughing.
No, I think if we go a little bit before that, so the question is, why did the central bank in Brazil hike first and hike more? And
with the pandemic and the inflation that followed up,
And I think it has to do also with the fact that, much like our technology scenario, our understanding of the macro was a bit different. So at that time, I remember going to those BIS meetings, and most people were saying, this is a supply problem. And, it's a supply problem, and you have this thing between consumption of goods and services, and you're shifting from services to good because people are at home during the pandemic, but then you're going to go back into an equilibrium, and that's going to bring inflation down. And people ignored the fact that there were $8 trillion being put to work on $9 trillion on an 80 trillion economy, which for us was something that, the cost would come at some point in time. Then we started to analyze the argument that the problem was supply. I remember having endless discussion. Okay, what's the problem in supply? Oh, semiconductors. You look at the production and it was only going higher and higher, so it couldn't be supply. Oh, the logistics. You look at the the cubic meter being transported, also going higher and higher. All of a sudden, realize, there might be some supply disruption, but that's not what's causing it. And then we started to realize that you look at the trend line between goods and services. You can look in the US or Canada, but in most places you're going to find the same thing. You had this huge shift on the trend line for the consumption of goods, and today it's still not back to the trend line. It's much higher. Where services, you had this drop, and now it's back to the trend line. And so all of a sudden we realized that there is a shift in demand for goods that seems to be more permanent. And the problem is when you shift the demand for goods, you also shift the demand for energy. Because to produce goods consumes almost 5 times more energy than produce services. So all of a sudden, we start to realize that you not only had an inflation, in our view, that was different from what most people are saying, but you had this dislocation in the demand for energy. And then on the other side, you had the green energy, the sustainable projects. You had a huge huge cut in investment in fossil fuel. All this together for us meant inflation is going to be higher and more permanent. And that's why we hiked before. That's why we hiked more. Luckily, I think part of our scenario actually turns out to be right, part didn't. But then the question is, why are real rates so high? And you need to remember that when you look at the short-term inflation, part of the lowering of inflation was due to cut in taxes, which we don't think are, it's not permanent, it can't be, and we need to take that into consideration. So the inflation would be around 9, not 5.5 if it hasn't been for that. Now, you can say that all the countries had measures to face higher cost of energy and food, and Brazil hadn't done anything and all of a sudden decided to do by cutting tax. So at the end, this argument could be used against us in a sense saying, but everybody did the same. But the fact is, when you look at inflation, part of the lowering of inflation was due to that. And the other thing is, Brazil has this very vivid memory of inflation. And I always say that central bankers, they try to avoid, they know they have to walk into this thin line of making these 2 mistakes. One mistake is, I don't do enough, and I have to go back into hiking. And in that sense, if I have to do that mistake, it's probably going to come with a lot of credibility cost, and in some cases, like we had in Brazil 3 times in our history, you have to hike much more and you put the country into recession. And the other mistake is you do too much and you realize ex post, I could have done that with less harm to the economy. And in that sense, also there is a credibility issue and then you have to cut rates. The problem that I see is that you're always walking to trying not to make these 2 mistakes, right? And the central bankers of the developed world, they always say, okay, I can make the mistake of doing too little because I can always go back into hiking and my credibility is so strong that I can do that with less harm into the economy. Now, what you see is that when you are too much behind the curve, you're almost being pushed from one side to the other. In a sense that even some central bankers in developed countries now are saying, I prefer to err on the other side of doing too much because I already had this, this credibility loss. So again, this is something that we always see. We decided to do it first. We had a different vision. We understand real rates are high. There is also an issue of debt. At the end, is a relationship between the return and the risk. And if you have more risk, you have to offer more return. But one thing that a lot of people miss is that I don't manage the whole yield curve. I manage only the short end, right? And if
we are teaching that in my class. So that's what you are trying to do. But the Japanese were trying to manage the whole thing.
Yeah, I would try not to comment on that, but. But I traded. I was a trader of interest rates for 20 years. I traded many different countries. I saw the countries that most times ahead of time that were going to do badly, and you could see how the interest rate curve, the format has a lot of information. You don't want to take that away from you. The information in prices are very important for central bankers, and sometimes you hike a little bit more the short end. But if you're able to control the steepness of the curve. Remember that for countries like Brazil, investments don't run on overnight. They run on higher, on the longer end of the curve. So I would do no good if I lower the short end and the curve starts steepening because I have no credibility to do that move. And at the end, I realize that all the debt of the country has to be rolled over on the shorter term. I have no long-term funding, and I cannot do projects that are important for the country because most of the projects that are relevant, they are not financed on the overnight.
Okay, let me ask one more question, very, very short. The 2 things that impressed me the most about your presentation, the first one is transforming every cashier in every little store, 7-Eleven or whatever, into an ATM. I think that that's brilliant. And the second one, which I love the 2 times I've seen you make the presentation, is that app where you show the iPhone with. Now, there is a digital wallet there and the 3 banks on top. I imagine that in the wallet I can have euros, yen, anything, any currency I want.
Yeah.
And I can have one of the banks, maybe a foreign bank.
Yeah, eventually, yes.
Yes. That assumes that there are no capital controls because it's impossible to control it.
That assumes that the currency
DeFi, yeah.
The conversibility, yes.
Yes.
It assumes the conversibility. Yes.
Okay. And so you are ready to have 0 capital controls?
We are ready to go into a process in which the currency is convertible, which means that you can have bank accounts in different currencies. This is not happening now, and this is not something that you get, that you wish for. It's something that you get when you have credibility enough, because it's very difficult to talk about innovation in the currency with the goal of having conversibility. Conversibility is not something, in my opinion, that you aspire for. It's something that you get when the time is right and when you have stability in your currency.
Okay, let me open up for questions from the audience here.
The first question is about the inclusiveness and the indebtedness. So I think the indebtedness, there are many ways to look at it. You can look at the movie, like the dynamic situation. You can look at the photo, which is what's happening right now. But also you need to look at the qualitative elements of it. So we are expanding the mortgage market in Brazil, which make the total indebtedness go higher. But you can actually have the total indebtedness going higher with the income being compromised, actually being lower. And we've seen that in some other places. In terms of why the debt is higher now. It's important to mention two things. First is, yes, the indebtedness is going higher, is something that we look at. You have other categories of debt that are going higher, like, but a lot of the debt is outside the banking system. Almost 50%. It's close to 50%. I don't have the exact number. I think it's actually a little bit more now. If you look at the lower income people, the debt is related to utilities, to merchandise, but I mean, the things that are outside the bank. And that has a history of increasing in terms of the default rates right now. And we're looking at that and trying to see how can, and there are some programs for that. On the agenda of the central bank, what we try to do is, how can we make this better? And I didn't have time to talk about all the pillars of the agenda, but there was one pillar of the agenda, which is inclusion, that has other products that are non-related or not specifically related to technology. One of them is to incentivize the co-ops, which is the cooperatives of credit, which is growing at 40% in Brazil. And the co-ops have had very, very good results because during the pandemic, they turned down much less number of loans because when you have a big crisis, and credit is a business of asymmetry of information, if you have less asymmetric information during the crisis, you can actually continue to give out loans. So we saw that during the crisis and we stimulated a lot the co-ops. And what happens is it kept growing. The other thing that we incentivize a lot is the microcredit, because the microcredit is a very small ticket. Banks don't really want to do it because it takes a long time to build a portfolio that is actually meaningful for a big bank, but it's very good for people. And it carries in it a good amount of stimulus for financial education. One other thing that we did is we connected all the renegotiation of debt to exposure to content of financial education. So for example, we have a weekend, we did that. We had a weekend in which the banks were open to finance all the debt for people. But you could only do that if you took like X hours amount of financial education. So we are trying to do that because the reality is the information is out there. Anybody can go into the net and all the information is there. The problem is how can you incentivize people to actually have the exposure to the content and to learn from it. So that is, the second question was on energy, and I'm not an expert on energy, but I think from the accusation that cryptos consume a lot of energy, and it's true, and a lot of us have built those, I myself have built those things to produce Bitcoins in the past, and you realize you actually shut down the whole energy of the whole building, and it happens a lot. From now understanding that actually the tokenization can have the opposite effect. So how can you price externality in a way that you can connect those who want to pay for someone who wants to produce better? How can you connect those through tokens and to crypto? So I think now it's turning into how can I price externality in a tokenization form so that I can link those two in a much more efficient way. And I think there are a lot of projects on that. There's some projects that are going on in Brazil. And I think that's an area that has a lot of future. The other question is why we didn't...
it's PIX versus PIN.
Yeah, but the question is, I think, is deeper than that. The question is, why does it need to be a public good? I mean, so the question is public good against private good, right? So, and you have the Zelle and you have all the systems that you have in the US, and you're now seeing that the Fed wants to do the Fed now, which is going to be very close to PIX, by the way, and I'm talking to them a lot on what we're doing, right? So the question is, why do you need this rail to be a public good? And I think it has to do with the fact that you want to have a wide base, wide accepted, and you want that to be an element that diminishes the barrier of entry. Whereas when you develop it privately, you're going to connect parts, but it's used in a way that actually increases the barrier of entry. And it's the same thing with the ATMs, right? If you look at the ATMs, for example, in Brazil, you have a company that controls the ATM, and if you're a small bank, if you want to open a bank, and if you want your clients to have access to ATM, you have to pay for that company. So all those things. So I think at the end, the debate is public good versus private good. And we can go on and on why I think the common rail for payments needs to be a public good. We've done a lot of research on that. We can go into detail on that. But basically, I think that's the main distinction.
Roberto, thank you so much
Thank
for
you.
coming.